Please and welcome to Things Invest. We're talking about investing, finance, and professional development. For today's video, 8 terms only. The investment we're going to talk about today will be Tesla and NIO. In respect to the overall equity market today, we've been having a lot of selling pressure today amid from the regulatory concerns after the Chinese regulatory government removed the vehicle for hire company Didi, ticker DIDI, from the app stores in China over this data security issues that's been cultivating for quite some time now. And also subsequent to that, it also delays its US IPO. In an international perspective, China has also proposed that going forward, they're going to be stepping up the regulatory pressure on all the Chinese firms, that are based in China, even though they're listed offshore going forward. So they basically try to be the international police for all of the Chinese-based companies going forward. In addition to the negative media affectation come from China, investors has also digested a weaker than expected data set on the services sector in the US as well, which have some direct correlations to the volatility of the oil price as well. Just to look at the index real quick, on Dow Jones, it fell about like 321 points today, down about 1% in mid-trading day, while S&P 500 fell about 0.6% and Nasdaq's down about 0.3%, so it's a little bit more neutral in comparisons to other indexes. Oil price also pulled back from the earlier gains after the OPEC meeting that collapsed because of the no deal, right? And with respect to oil, it's been up for more about like 1% early on Tuesday morning, with the price of oil topping around like $77 a barrel. Oil was down about 2.5% in the afternoon as the broader market sold off from there, right? And the stock was basically fell further due to the fact that the institutions for supply management showed that service sector activity was 60.1% in June, as down from 64.0% in May, which is basically below consensus estimates about 63.5%, right? So this drop in activity obviously foreshadows some sort of a pullback into the equity market due to obviously restaurants and retailers having difficulty finding workers, as well as supply chain disruptions overall in the macroeconomical sector perspective. So I'm going to go through a technical analysis to see, with respect to the investments that we have today, how should we be dollar cost averaging, how should we be mitigating and maneuvering through these risk profiles going forward. So stay tuned, stick around, let's make Alright, so moving on to the technical analysis for Tesla and NIO. I'm going to go through Tesla first. I'm recording as of 4:15 p.m. on Eastern time right now. And with respect to Tesla, today was down about, close to about 3%, trading around like the $659. And with respect to NIO, it's down about 0.3%, trading around like the $50.30 level. And with respect to Tesla, let's just go through the technical analysis historically real quick, right? And with respect to the run up that we had in Q3, Q4, ever since that stock split 5-1, ever since that inclusion of S&P 500, and also with respect to the positive catalyst from Joe Biden's being elected as president of the United States on his green energy plan, on investing into the U.S. infrastructure, right? But with a green energy focus on focusing on environmental efficacy, right? And also on top of the fact that with respect to China, with their proposal of the 2030 plan to basically convert and transform all the vehicles into electric vehicles going forward from the antiquated, obviously, petrochemical vehicles and diesel vehicles that we were using historically, right? So all the transportations, including private automobiles like sedans and including like public transportations like buses, are going to be transformed into electric vehicles, right? Which also cultivated the pop-up of all of these automakers that are focused on electric vehicles like Li Auto, like NIO, like XPeng, etc., to pop up in China all in the same time, right? And with respect to that, it subsequently run up the Tesla stock all the way to the $900. At one point, that was the all-time high, $940. And ever since then, we sold off all the way because of, firstly, the sector rotation. Secondly, is because of the Q1, Q2. It's typically a down quarters for a lot of automakers because for a couple of reasons, right? Q1 is typically, cold, wet weather. People typically don't prefer to buy cars around these type of seasons. And also on top of the fact that because, with respect to Tesla, with the Chinese exposure, that February is actually a shorter month in comparisons to other operating months in the year is because Chinese New Year lays on in February, right? And basically half of the month is basically people on vacation. So people are not really operating or like, basically supplying the demands for their respective customers, because customers are not even buying anyway. So that also have some correlation effect into the sell-off. In addition to that, more of a macro news, right, with respect to the chip shortage that we've had, just across the whole telecom sector, but not just specifically in EV, right? But obviously, EV vehicles needs these computer chips for us to operationalize and operate. So that also has a drag effect into it, right? And also with respect to a lot of just negative CPI report that we're getting from the Federal Reserve on the inflationary scares, on the quantitative tightening foreshadow going forward as well, which all of these negative catalysts, and I think I've been keeping tabs, like 7 negative catalysts so far, but something drove the sell off from there, right? And then we had a little bit more of the oscillations because some CPI report has been positive, some FOMC meeting has been positive, and that kind of like jerk the market up and down in more of an oscillation fashion, right? But in the recent time frame right now, you could see that we're slowly recovering right now because, again, right, the sector rotations occurring again, shifting from the recovery stocks, to back to the growth stocks right now. And I think the sector rotation is happening right now among hedge fund community. So that's something that we're seeing in front of our eyes right now. So let's take a look at the technical analysis more of a near term right now after I talk about just history so far. You can see that we ran up significantly ever since on. Basically, the bottom was occur on the 20th of May, and you can see that we oscillated because of the FOMC meeting that we had. And subsequent to that, because of the positive outlook on the FOMC meeting, on the Fed's confirmation on the inflationary outlook going forward from Jerome Powell, we got that great green candle confirmation, right? Basically matched with the sell-off candle that we had back in May 10th. So basically, this is breaching the gap that we formed. So that was a good sign, right? And we subsequently broke through the level of the identification level of the $660 level that I've identified, that I drew a line here, right? And that was the level of confirmation. But you can see that right now we are kind of breaching that right now. We broke that actually. Ever since hovering around like the close to the $691, because we basically try to break through the 700. But if you have to look at the MACD and the RSI right now, we are highly overbought at that point, right? We're like all the way to the top in the sky, and also on the MACD, we're highly overstretched right now, right? So when I see the price for Tesla to be going forward, I think right now it needs to cool down on the RSI perspective right now, and I do see a little bit more selling pressure because we have kind of crossed for quite a long time now. If you look at the durations of the cross section, it's quite a long time. We haven't really crossed ever since, but we've just been kind of up and away. And also this green candle right here, it's matching with historical levels, so that was a good, so it kind of canceled out. And however, do we see another resistance level that we could potentially fall down in between? I don't think. I think this green candle kind of mixed it already, and we didn't really have any like layer up or like an escalator type of step staircase. So we are basically, I think we have a high propensity of actually falling back down to the $625 in near term before the oscillations to go up, right? And I think if I was you right now, despite today was a sell day because of the negative news from China, and also with respect to the weaker than expected service sector data in the US, I think, we do have a little bit more of a selling pressure going forward. We might rebound slightly, but because of the fact that we broke the 664 to be more specific, that we're below the level, we do not, again, right, we do not ever hover between resistance levels, right? We either go up and bounce off of the resistance level or go down, bouncing down from their ceiling, right? So I think we are doing the bouncing down from the ceiling right now. So I think the next comfort zone that we'll get down to will be the $625. I think ideally for me, I would probably dollar cost average from there, but I do have a relatively large position right now. I have about 1,125 shares of Tesla right now. So I might get to like another 25 shares just to make that a 50 even. But right now I do see a little bit more sell off. I think by 625, when we get there, we should be cooled down a little bit more on our side perspective, and we should be crossed down on a MACD perspective. And I do see the cross is actually occurring as we looking at right now. You see the curvature, and we have a more propensity to merge going forward and then make that cross section. and then do wait a little bit until we cross back up again, right? That's just the logics of how it should look like, in a more of a supply and demand dynamic perspective. But also look at this as it were like throwing a baseball, right? You need to kind of curve it down, and then the ball will basically bounce off the ground and then come back up again, right? So it's confirming that we should be seeing a little bit more of a bearish pressure going forward a little bit. Not significant. We're not going to jump all the way down to the 573 like we had previously, because that would completely break the chart. But 625 definitely very logical in my opinion, right? And then we'll go back up to the 700. But 700, that will be determined based on the earnings call that's coming up in the near future, which I believe that should be coming in about a month and a half from now. And with respect to Neo is definitely a little different actually. Neo, if I look at it on a daily perspective, comparable to the similar historical dynamics, so I'm not going to repeat myself again. We have pumped up all the way to the $55.13 level, right? And you could see that if you look at that historically, we're basically matching with the gap that we had prior on February 22nd. So we basically matched it, but with respect to how substantive that level is, if you look at it historically, it wasn't that substantive. You could see that it only happened like once, twice, 3 times. Right now we are, I think this is a little bit overstretched. And also on top of the fact that we kind of have a gap that needs to be formed at the moment. You could see that gap is that we formed on June 28th because of that really positive media affectations around the European expansion, and you could see that it's matching with this right here on the 26th, and there's a gap right here as well. Okay, so this is a relatively, I don't think there's a lot of substance in the level that we at right now at the $50 level, but again, this is a psychological resistance level, right? So I think we can actually make it through above the $50 level despite the gap that would form here. I think we have a probability of breaking down to the 46 because of the fact that the RSI is highly overbought right now. If you look at the line, right, we're way above the water. But we recently just crossed MACD right now, so we do see a little bit more of a bullish sign going forward. So my preferential methodology going forward is that if you want to buy at $50, that's fine. Just know that we have a gap to form. There's a high propensity that we will go down to the $46, $28 level, and then we'll rebound from here, right? Because RSI needs to cool down a little bit, despite the MACD is very bullish at the moment. But you do already see some curvature going on, despite just the short duration of the curvature that we've formed so far, right? If you look at that historically, right? So I give this maybe, I would give this a 60% likelihood will fall down to the 46. 40% that will actually keep staying at the $50 level. Because again, it's a psychological resistance level. Any flat number like $50, $40, $30, those are hard walls to crack. And despite the negative news that we had today, especially coming from China on the regulatory pressure going forward, that's a pretty good sign. That shows how substantive and how much gravitas Neo is right now. That despite this negative news, it didn't really shake investors off. Alright, just to go through the technical analysis in a more of a simplistic perspective for Tesla and Neo. With respect to Tesla, the current level of the 659, I think knowing the fact that we broke the 662, with a high propensity to go down to the next substantive level, which is 625, right? So I think that's a level to dollar cost average. That's a fair level to do so. Do we see 605? I think, knowing the fact that 600 is a very hard number to crack through, knowing the fact that we've tested that level and consolidated those levels for quite some time historically, right? So 605 would be a great level to dollar cost average if we ever get there. Do we see 575? I don't think so, based on the fact that, we have had already a lot of negative news so far that happened in Q1, Q2. I think the sector rotation is happening. But, who knows, right? If there is a lot more tension between US and China going forward, knowing the fact that Tesla has a lot of exposures in China, right? That could, potentially get us there. But I think it will be relatively sharp as a V-shaped recovery type of rebound from there, right? In respect to price target 950, 52%, 1.5 times your money. With respect to Neo, I think the current level of $50 is not a bad level because that's a very substantive level that we have tested before. Not that substantive. We've only tested that like 3 times, or 4 times if you count like this time today. But I wouldn't count it today. Today is kind of like a tester right now. But a more substantive level would be the 4650, right? Which is a level that we consolidate for about like 3-4 days before that run up to the 50 and then run up to the 55, right? With respect to 43, I think the likelihood of us getting there actually will be low. But if we do, again, right, Black Swan events news that could get us there, then I'll be happy to buy more. My cost average right now for Neo, it's about like 37 something ish right now. And I have about like 7,500 shares at the moment. So I would love to dollar cost average at 43, but at the 50 right now, I would kind of wait off because I don't want to be too greedy, firstly, because that's an emotion that you don't want to apply to logics. And I feel comfortable chilling with this level that I'm at right now. I respect the price target 85, 70% upside, 1.7 times your money. Alright, so that's it for today. Respect my technical analysis on Tesla and NEO. Hopefully you guys find this helpful. I know it's been a while since I last covered equity, so I apologize for being too, focused on crypto so far. But appreciate your patience. I appreciate your guidance and insights that I've been reading your comments on a daily basis. So I definitely appreciate the community that we're building slowly, right? Please, feel free to hit me up if you have any questions, and please hit the like button, subscribe button, so the bell notification, and watch out for news coming up. Take care. Bye.